Hello, and welcome to HouseLuxe Estate, your go-to channel for everything related to smart investments. Today, we're shifting gears and tackling a topic that's got everyone revved up. Is buying a car a good investment? We'll explore the ins and outs of car ownership, the financial implications, and the potential return on investment. We'll be looking under the hood of this complex issue, examining the pros and cons, and comparing them head-to-head. So buckle up as we take a deep dive into the world of cars as potential investments. To start with, let's get into the upside of investing in a car. Firstly, there's the convenience factor. Owning a car can provide a level of convenience that public transportation or ride shares just can't match. With your own set of wheels, you're not bound by bus schedules or the availability of drivers. You have the freedom to go where you want, when you want. Secondly, a car can be a status symbol. In many societies, the car you drive can say a lot about your social and economic standing. A luxury car can project an image of success and affluence, and that can sometimes open doors to opportunities. Now let's talk about the fun part, the potential for high returns. This is particularly true for classic or rare cars. These vehicles can appreciate in value over time, especially if they're well maintained or restored. Some classic cars have even been known to double or triple in value over a period of 10 to 20 years. It's like having a savings account that you can drive. Then there's the opportunity to earn income. If you have a car that's not in use all the time, you can rent it out through car-sharing platforms or use it for ride-hailing services. This can provide a steady stream of income that helps offset the costs of ownership. And finally, there's the joy of ownership. If you're a car enthusiast, owning a car that you love can provide a great deal of personal satisfaction. Whether it's the thrill of driving a powerful machine, the pride of restoring a classic, or the pleasure of showing off your ride at car shows, the emotional return on investment can be significant. So there you have it, some of the potential benefits of investing in a car. But what about the downsides? Now let's shift gears and explore the potential pitfalls of investing in a car. First and foremost, the most glaring con of buying a car as an investment is depreciation. As soon as you drive that shiny new vehicle off the lot, it starts to lose value. On average, a new car can lose up to 20% of its value in the first year alone, and it doesn't stop there. It continues to depreciate every year thereafter. So unless you're investing in a classic or collector's car, depreciation is a significant factor that can erode the value of your investment over time. Then there are the maintenance costs. Regular oil changes, tire rotations, brake inspections, and other preventive measures are essential to keep a car running smoothly. However, these costs add up over time and can take a big chunk out of your potential return on investment. And let's not forget about unexpected repairs. Even with a warranty, there are always those unforeseen mechanical issues that can set you back hundreds, if not thousands, of dollars. Insurance is another factor to consider. Depending on your driving record, the type of car you buy, and where you live, insurance costs can significantly add to the overall cost of owning a car. And let's face it, the more expensive the car, the higher the insurance premium. Additionally, if you're buying a car with the intent to sell it later, you'll need to keep it in pristine condition. This means limiting its usage to prevent wear and tear and avoiding accidents, which is easier said than done. Lastly, unlike other investments, such as stocks or real estate, cars don't generate income while you own them. In fact, they require constant outflow of money for upkeep. If you're looking to invest your money into something that provides a steady stream of income, a car might not be the best choice. As you can see, investing in a car also comes with its fair share of challenges. Having covered both sides of the coin, let's do a side-by-side comparison. On the pro side, buying a car as an investment can offer a lot of flexibility. It's a tangible asset that you can use every day, unlike stocks or bonds that you can only observe. You control where it goes, who uses it, and how it's maintained. This sense of control is a big plus for many people. Additionally, if you're a car enthusiast or collector, the potential for appreciation on certain models can be a real boon. Classic, rare, or high-performance cars often see their value increase over time. If you're savvy and patient, you can even turn a tidy profit. Plus, there's the joy of owning and caring for a piece of automotive history. However, on the flip side, cars in general are depreciating assets. The moment you drive a new car off the lot, it loses a significant portion of its value. and it continues to depreciate with each passing year and every additional mile on the odometer. Furthermore, cars come with ongoing costs, such as insurance, maintenance, and fuel. These recurrent expenses can erode any potential return on your investment, especially if you're looking at everyday vehicles as opposed to collectibles. So, when might buying a car be a good investment? Well, if you have a passion for cars, an eye for value, and the patience to wait for that value to materialize, then yes, certain cars can be a good investment. But if you're thinking about your everyday run-of-the-mill vehicle as an investment, it's likely not the best choice. The costs of ownership, coupled with depreciation, make it difficult to see a positive return. As with any investment, the key is to weigh the pros and cons and make an informed decision. So, is buying a car a good investment? Well, it depends. We've taken a comprehensive journey through the pros and cons of car investment, and as we've discovered, it's not a one-size-fits-all answer. The decision ultimately hinges on your personal circumstances, financial goals, and what you seek to gain from the investment. We've discussed the potential upsides of car investments. For enthusiasts and collectors, classic and rare cars can appreciate over time, becoming valuable assets. They can serve as a status symbol, a hobby, or an emotional investment. For others, a car is a tool that enables income generation, such as using it for ride-sharing services or as part of a business operation. But with these benefits, there are also drawbacks. The majority of cars depreciate over time, often losing half their value within the first 5 years. They also come with ongoing costs such as maintenance, insurance, and fuel. These expenses can add up, putting a dent in your finances. A key point to remember is that unlike other investments, such as stocks or real estate, cars are depreciating assets. This means they lose value over time, whether they're driven or not. Moreover, investing in a car can tie up a significant amount of capital, which could be used elsewhere to potentially generate higher returns. However, it's not all about numbers. The emotional value of owning a car, the convenience it brings, and the freedom it offers cannot be quantified. So, circling back to our original question, is buying a car a good investment? The answer is, it depends. It depends on your financial situation, your lifestyle, your needs, and your goals. It's crucial to weigh the potential returns against the costs and risks. Whether you're a car enthusiast seeking to own a classic, a commuter looking for convenience, or an entrepreneur exploring income opportunities, make sure the decision aligns with your financial goals and risk tolerance. Remember, the best investment is one that aligns with your financial goals and risk tolerance. And that wraps up our discussion on whether buying a car is a good investment. We've journeyed through the pros, the cons, balanced the scales, and reached some interesting conclusions. It's been an enlightening ride, hasn't it? We appreciate you joining us today, taking the time to digest this information, and hopefully, it will aid you in making a well-informed decision. If you found this video helpful, please give it a thumbs up. It's a small gesture, but it goes a long way in helping us reach more people who may benefit from this content. Feel free to share this video with friends, family, or anyone you know who might be pondering this very question. Remember, knowledge is power, and sharing is caring. If you have any thoughts or experiences related to this topic, we'd love to hear from you. Drop a comment below, and let's get the conversation rolling. Your insights can provide immense value to someone else in our community, and we appreciate any and all contributions. On that note, if you haven't already, we urge you to subscribe to HouseLux Estate. We bring you content that is not just about houses and property, but about smart investments, financial planning, and wealth creation. All to help you navigate your financial journey with confidence. Don't forget to hit that subscribe button and join the HouseLux Estate community. Until next time, keep making smart investment choices.